We build and manage investment portfolios exclusively for insurance companies, allocating across asset classes to maximize income and expected return net of fees. While we're recognized for our fixed income expertise, we've built relationships with best-in-class managers for non-core assets. While this structure is unique relative to many of our competitors, we want to step further to differentiate ourselves. We work with our clients on their overall asset allocation. When we think about asset allocation, we often think of modern portfolio theory. Unfortunately, given the complexity of the insurance industry, a theoretical, efficient frontier of optimal portfolios is difficult to achieve. It's more of a customized process. It's natural to want to focus on the return the investor is hoping to achieve, with the risk a secondary consideration. When we work with clients, we start by talking about the risks, specifically the value a client is willing to put at risk. That part of the process was quite extensive. When talking about risk, clients often refer back to their AAM programs. Even though they have identified the risk to surplus they're willing to take, we still work through our process, focusing on 4 main areas. First, we do a full company analysis, including how the company is positioned versus its peer group. Second, we determine the amount of capital available to bear market risks beyond those necessary for operating and financing activities. This is especially important if a client has not identified an RBC threshold. We do this from a regulatory and rating agency perspective. We use the NAIC's risk-based capital model to run pro forma RBCs, and we use AM Best's BCAR adjustment system to run pro forma models of BCAR to estimate the capital draw that jeopardizes rating stability. The last step of the process is to share all of this information with the client to either confirm or adjust management and the board's risk tolerance. With that risk tolerance identified, our insurance strategist runs various optimizations based on inputs and assumptions related to various asset classes. We look to maximize returns for that value the client's willing to put at risk, using constraints if needed, like minimum required yield or cash. If a client wants to be more tactical, we can show them other portfolios that take advantage of relative value opportunities that we've identified, and importantly, mitigate the downside risks. Of course, the process is ongoing, and that means rebalancing and conducting due diligence on outside managers and funds. In our effort to always be transparent with clients, we showcase all of our reports on our Clearwater reporting dashboard and review all the information with management and the board. Our clients are important to us, and we are pleased to support them in their AAM process.